BHP has unveiled a major leadership reshuffle with 4 executives stepping into new roles. Vandita Pant, currently Chief Commercial Officer, has been appointed CFO, and Raj Ud, currently President of the Americas Division, will take over from Pant. The other changes relate to Ud's position and that of Chief Technical Officer. According to CEO Mike Henry, the changes, which will take place in March, will ensure that BHP continues to build organizational capacity with the right mix of skills, experience and perspectives to deliver its strategy and pursue its growth agenda. Accelerate Property Fund is lightening its portfolio. The firm's agreed to sell Cherry Lane Shopping Centre in Pretoria, and that's for a price tag of 60 million rand, which is 5 million rand less than its last valuation. Accelerate says the disposal forms part of ongoing efforts to review its assets and ensure that they align with the company's current business strategy and growth plans. The proceeds of the sale will go towards reducing debt. Spur has opened a new franchise called Ciccio. It will serve as a sub-brand of Pizza e Vino. This comes as Spur has fully incorporated the Doppio Group into its stable after buying a majority stake in the company earlier this year. CEO Valnica says the restaurant group is now well positioned to capitalize on opportunities to expand the Doppio Group's restaurant portfolio and grow its presence nationally. Miners at Ciccio Platinum's flagship Bakubung mine have entered their second day of what the mining company deems an illegal sit-in. The industrial action started yesterday morning when employees chose not to return to surface at the end of their shift. Ciccio says it has received demands from the miners, but the firm hasn't elaborated on what they are or how many people are involved in the sit-in. This comes after a recent month-long unprotected strike at the same mine that ended in August. Consumer confidence slipped in the fourth quarter. The FNB-BR sentiment indicator declined to -17 from -16 previously. This is the lowest festive season consumer confidence reading in more than 2 decades. The lower reading is largely due to consumers' views around the outlook for the economy, which is being hobbled by muted external and internal demand, as well as chronic power shortages and logistics crises. Construction activity has picked up. The Afrimat Construction Index has come in at 131.5 points during the third quarter. This marks a near 7-year high, and the research suggests that if the momentum can be sustained in the fourth quarter, then the construction sector could be in for a new phase of sustained growth. Further afield, McDonald's is planning to open about 10,000 restaurants globally by 2027 in what could be the fast food giant's fastest period of growth in its history. Here's more detail on those plans in this package report.
McDonald's is set to supersize itself. The burger chain said Wednesday that it plans 10,000 new restaurants worldwide by 2027. That could make it the fast food giant's fastest ever period of expansion. The news came as McDonald's held a gathering for investors. It says many of the new outlets will be in overseas markets, with more than 3,500 just in China. The country is its second biggest market, and it recently struck a deal to gain greater control over its branches there. McDonald's has been largely unaffected by a choppy year for consumer spending in the US, thanks to its affordable menu. Chief Executive Chris Kempczynski said he was wary about making predictions for next year, but said the consumer had proved to be very resilient. Now the new expansion plan will see it hit about 50,000 restaurants worldwide by 2027. One analyst called the plan ambitious but exciting and said McDonald's has the capacity to pull it off. Among other initiatives, the chain is aiming to massively increase the number of people using its loyalty program. McDonald's is also partnering with Google Cloud to deploy AI systems in its restaurants. That should give it more visibility into each outlet, allowing it to identify cost savings and improve efficiency.
And in geopolitics, the EU and China are holding their first face-to-face summit since the pandemic. This, of course, comes as European nations continue to deride their economies from Beijing. Let's check in with our reporter Ndao Lechela for more insight.
That's right, Zinati. Now, relations between the two countries will be in focus as the Chinese president prepares to meet the presidents of the European Council and the European Commission. Joining us with more on these relations is Chiponda Chimbelu from Deutsche Welle. Thanks for your time today. Now, Chiponda, let's get straight into it. What's on the agenda at today's gathering?
Thanks for having me. Well, European Commission President Ursula von der Leyen called the talks with Chinese President Xi Jinping good and candid, and the Chinese leader urged mutually beneficial cooperation with the EU. But it will be hard for the two sides to find much to agree on. Geopolitical issues are top of the agenda for EU leaders, in particular Russia's war in Ukraine. Brussels will want to use its influence to get Beijing on its side to help it end that war. It will be emphasizing the need to respect sanctions against Russia. While Western countries have several sanctions on Russian exports, other countries, China included, are still trading with Russia. Now that limits the effects of the sanctions, and it allows the Kremlin to raise money for its war chest. But the EU won't only be focusing on Russia's war in Ukraine. They are also discussing the ongoing Israel-Hamas war in the Middle East. And of course, EU leaders are looking at the trade deficit with China, climate change, and human rights as well.
Now let's take a look at the areas that present the biggest challenges at the moment.
Trade is a major area of contention. In a statement in Beijing, European Commission President Ursula von der Leyen stressed the massive trade between China and the EU, and she put the average amount of trade at a whopping 2.3 billion euros a day. But the EU's trade deficit with China is growing. In fact, it reached a record 390 billion euros last year, and Brussels wants to level the playing field. But that's not how China sees the EU's efforts. So Chinese leaders will speak with EU leaders about the bloc's ongoing investigation into Beijing's subsidies for electric vehicles. For China, such efforts are seen as an attempt to reduce cooperation due to competition. And that's also something that applies to calls by European countries to diversify supply chains and de-risk from China too.
Lastly, what kind of outcome can we expect, considering some of the tensions that are currently at play, Chiponda?
Well, one area where we can expect some agreement is climate change. Experts from Brussels and Beijing frequently conduct dialogues, and they cooperate on many topics in that area. But the situation is a bit more complicated when it comes to getting China on board on Russia. Both China and Russia, of course, are part of the BRICS group of nations, and its members have been reluctant to condemn the Kremlin or take any actions against it regarding the war in Ukraine. And trade, of course, will remain contentious. Geopolitical tensions have only highlighted how important it is for the EU to diversify its supply chains and reduce its dependence on China, which, of course, it considers a partner, competitor, and systemic rival. Now, this is why we've seen EU countries also looking at how they can better protect their critical infrastructure from Chinese investors. Both Brussels and Beijing have their interests, and it's becoming harder for them to be partners because of their fundamental differences on issues like the war in Ukraine and human rights.
Chiponda, let's leave it there. It's always a pleasure catching up with you. That was Chiponda Chimbelu from Deutsche Welle.